Hey, John Murphy, CSSI. Let's go through another episode of Is This a Good Building for Cost Segregation or Not? These are tips for CPAs, tax advisors, and of course, commercial real estate brokers and building owners who own these buildings. Let's take a look at Savannah, Georgia. So we're going to go take a look at this beautiful waterfront. Of course, Savannah is booming because of the port is growing really well. So a lot of property that's transacting there, a lot of commercial real estate happening, a lot of things going on in the industrial area. But I wanted to take a look at, I'm in CREXI, and I want to just take a look at some random properties that are for sale. Let's just see what we can find here. So we're going down here. I don't know. Here's a multi-family apartment building. So one of the things that happens is I'll get calls or questions from people say, hey, is this a good building to do cost segregation on? And the fact of the matter is that if the cost basis is more than about $200,000, every building is great for cost segregation, okay, as long as you're deriving a rent payment or a lease payment off of it, if you're making money, if it's profitable for you, and if you can use the increased accumulated depreciation. And we always say talk to your tax advisor. But I get calls from tax advisors that say, is this a good building for cost segregation or not? So let's take a look at this one. This is an apartment building, it says. So this is pretty small, 4,300 square foot apartment building on a tiny little lot, 0.11 of an acre, sold for $550,000. Let's figure that this land is probably worth $125,000 or something like that, maybe $150,000, depending on where this is at. So I'm going to run an estimate based on, call it $425,000 for a small apartment building. You're going to come over here to my site on the right side, go to Cost Seg Calc, see that up at the top. That's a redirect that's going to come to my site at CSSI. We've got a fantastic calculator here. So you can see this, so you can put it in. We've got all these different assets that you can scroll through to find your asset. It's going to be an apartment building. Let's say it's going to be 32% tax rate. That's your marginal tax rate, whatever it is. If it's 24%, 32, 35, 37. I think we said we're going to say the building cost basis is $425,000 after deducting for the land. I think this sold in September, was in service in 2025, and it's going to be applied to the 25 tax return. So you plug all that in, and now you get this whole estimate right here, this estimate of savings. This is fantastic. We give you a low end and a high end estimate, so this owner could expect somewhere between $88,000 and $118,000 in a depreciation expense in 2025 if they do cost segregation. If they don't do cost segregation, they're going to get a straight line depreciation deduction of $4,500 this year. So if they can use more than $4,500 in a depreciation expense, it's normally going to be worth the price to pay for a cost segregation study. So tax savings at 32% if he or she can use it, somewhere between $26,000 and $36,000 by doing a cost segregation study. And again, these tax savings, they're a cash flow boost. It's a tax savings this year. It's ultimately a deferral because you're going to have to get this all caught up again when you go to sell the property, but you might do say a 1031 exchange to just defer that tax. Let's take a look at something else. Let's go back here. This is a QSR fast food. The land value is high here relative to the improvements. The improvements don't look particularly impressive, I don't think. It's a 2,500 square foot building, older building on 2/3 of an acre, sold for $1.6 million. It's probably in a really nice part of town. Most owners probably are not going to put $1 million basis on the land, but they might. So let's just come down here and see if we can find a retail store. Is what we're going to put that in. I guess that's really kind of a restaurant. So let me go and find a restaurant. I'll put a restaurant there. 32%. Let's say out of 1.6 million, let's say they put because there's going to be a nice parking lot there. Let's say they put 800,000 to the cost basis and 800,000 to the land. A lot of CPAs I deal with kind of use a methodology where they'll say 10 or 20% gets allocated to the land. At the end of the day, you're supposed to put the fair market value of the land. So let's just put $800,000 here just to run this estimate. I think they bought this in September, so I'll leave that as September 2025, tax year 2025, and we'll calculate this one. Okay, so this is based on $800,000 of basis. They're looking at a $204,000 to $299,000 depreciation deduction in 2025 because they purchased this building. If they don't do cost segregation, they're going to get $5,992. So it's a significant tax savings if they can use it. Call it somewhere between $60,000 and $90,000 that they might be able to save on their taxes. So anyway, that's enough just kind of running through the calculator. If you go to costsegcalc.com, you can run your own numbers on your own asset, or if you're looking at acquiring a property, you can do that. If you want a real quote, an estimate, you want to know what the study fee is going to cost, you can just click right here, plug in your name and contact info, and I will get you out an estimate. Typically takes us about a day or two to get that out the door to you. So let me know if I can be of help. John Murphy. You can connect with me on LinkedIn. Find me at my blog at costsegbuilding.com. Also check out the calculator, of course, at costsegcalc.com. Take care.